Hello, everybody. This is Brandon. Today is June 23rd, 2024. It's Sunday. It's approximately 3:30 p.m. as I do a preview edition for the coming week, June 24th to June 28th, 2024. Now, we all know that the stocks are trading, the stock market, that is, at all-time highs. And what is going on here, and we want to show you what we're looking at, go over all the divergences that are present in the markets, and what our thought is. Before we go, please read the disclaimer. Please read it, pause it. If you agree, please move forward. And of course, my X.com Galaxydoc Market plug. We are on Twitter, X.com, and great content. I want you guys to follow us if you want additional information that you don't get at YouTube. All right. So a lot of people complain that my videos are very, very long, and I can't help it. It's going to continue to stay long because I put a lot of effort into it, and there's a lot of analysis that goes into it. And so what I'm going to be talking about, as usual, is the market direction. We're going to talk about the things that matter in the news. Remember what I always say, look at what they do, not what they say. We're going to go over the fear and greed component as well as all the divergences that are present within our technical analysis. And of course, the technical analysis of the markets and stocks of interest. We will look at the sector rotations, and I believe that is going on right now. And we'll look at the stocks to watch, and I'll summarize everything and kind of give what I think is going to happen. And this is a very confusing market at the moment, but not really if you think about the historical precedences. And a lot of things that are happening has not happened since 2008. Furthermore, I myself am confounded because I was looking and still continuing to look at a market rally without these divergences present. And so, I've called after June 8th that the markets will be bullish and grinding higher, and it really has done that. The only thing that obviously gives me caution and pause is the fact that there's just divergences everywhere. And what does that mean? All right, so let's talk about the news. And I've been using a lot of X.com as well as other news sources, but this is what matters to me. Number one, first and foremost, is that the delinquency rate of multifamily housing units, and these are basically can be apartments, condos, townhomes, or whatever the case is. Those are basically having the highest default rate since 2011. And if it goes any bit higher, I mean, we're going to start hitting the 2008 territory. And you know very well what happened in 2008. And it's something that we need to pay attention to. Okay. Folks, these delinquency rates in housing is also a spillover into my what I call consumer, confidence issues, right? And it's the consumer demand destruction that is happening. We see that in consumer discretionary stocks, in fast food. This is just going to continue to spill over into those areas. So this is not looking good, folks. It's spilling over into the housing market. And for those of you that are out there and saying that, because the insiders and powers that be are going into tangible assets like real estate, gold, that the pricing will not come down and that the hyperinflation is going to take effect. But I tend to disagree a little bit. I think we are getting hyperinflation, but we're also going to get, as we lose productivity in the GDP and everything else on job losses that are happening, even though our governments do not acknowledge that. What's going to happen is we're going to start getting into some deflationary and recessionary effects, and this is where it's beginning to show up. So pay attention. I'm not saying the housing market's going to crash tomorrow, but it's going to be a cumulative effect over the next few months to years. Now, this is something that everybody knows. This is from June 18th. And, everybody thinks this is immaterial, but it is material. So Norinchukin to liquidate 63 billion in Treasury and European bonds to plug massive unrealized losses in their banks. Remember what I said, all the regional banks and even global banks like this. By the way, this Japanese bank is catering to farmers and low-income people for their pensions, and they're having problems. And this is not isolated to just Japan. I've been harping on regional banks, which we'll talk a little bit about later. There was some massive bailout or rescue this week, And that just shows you that the powers that be, FDIC, Fed, everybody else, central banks are very, very worried about the health of the banking industry because nothing ever got fixed in 2008. But pay attention to this. This could have a spillover effect. Now, the other thing is, for those of you who think that the housing market's going to go up indefinitely, this is from Trisha FL Sun, and I thought, I don't normally follow this person, but I thought this is interesting because it falls in line with what I see around in Arizona where I live. Private equity owned institutional landlords, First Key Homes, trying to sell for 336 at 25% loss when they purchased this in May 2022. And folks, I've been saying this a while, but I think housing prices peaked in 2022-23. And they paid a lot, 445, and they're trying to dump this into the markets. And so there's going to be, I believe, despite contrary belief, a lot of people think I don't know what I'm talking about in this area, but I do. I think there's going to be some pricing deflation that is coming, despite the hyperinflation. Everything else is going to rise, but the nominal home demand is going to decrease, and these private equities can only buy so many. Okay, now. The other one that I wanted to show you was this is from June 14th, and this is current Dow transports. I've been covering this quite a bit, and I thought this was interesting to note because in 2008, right before, remember I told you there's a lot of parallels to 2008, right before the Lehman Brothers, and if you don't know what Lehman Brothers are, go check it out. Google it, see what happened to them. So the Dow transports basically double topped and basically try to recover and chop sideways before coming down. So we have a double top right into this area. We're chopping sideways, and we believe that this is what's going to happen. Remember, the Dow transport theory is kind of the canary in the coal mine type of effect, early warning system, so to speak, about the market health. Okay. And they've been diverging with the Dow Industrials, and we'll go over that in a bit. But this is important. It is something that you need to pay attention. This guy sounds like me. I've been saying pay attention. Are you listening? Now, Hezbollah, this is June 23rd today, is showing off Israeli targets of sensitive sites in their new video warning. So, guys, this isn't over. Like I said, as the instability continues, as well as hyperinflation continues, as well as our sovereign banks and central banks are becoming more and more desperate, we're going to have these type of war type things that are happening. Okay, but because the geopolitical instability that exists in the world, it's very important to pay attention to literally what this new video is warning. Is it to introduce fear in us, or is this something that's going to blow up into a bigger conflagration that has been happening? Everybody thinks everything's calmed down, but I don't think it really has, and so we need to be cognizant of this. This is one of the war drum beat that is going louder and louder at the moment. In a show of significant weakness again, we're withdrawing our aircraft carrier Eisenhower from the Red Sea because the Houthis, and I don't even know why, this is kind of that whole Taliban thing where we got out of Afghanistan and all this other stuff, is that why even send our aircraft carrier there if we're going to pull it home because we're afraid of being attacked by these Houthis? And who are these? Think about the narrative that is being formed, folks, all right? And it's projecting weakness for United States right now. And then, of course, this is something that we need to pay attention. There is a snap re-election of the president in France. I think people have had enough of Macron or whatever the case is, but you need to watch this because this is going to cause significant dislocation in the markets should Macron lose. And so, there's anxiety, and I think this is something that's going to build, and I believe there's going to be some bigger event springboarding off of this event. Okay? Now let's go into my McClellan Summation Index because this is the direction part. And, June 21st, MSI showing early signs of bullish MACD divergence. So this is that orange line that I'm talking about. Yeah, it is bearish. We're coming down, but now early warning sign is always going to be that MACD histogram. Now, this doesn't mean that we're going higher. It just means that, we're looking at this and are we going to pause here a little bit? Or is this telling us that potentially the summer rally may be coming upon us? Or is this just a breather? I know we got into this volatility box right here I told you about. We broke below it. Now we're kind of flattening out. It can flatten out here, folks, and then, go back further down, just like here. But we got to pay attention at this point. There is some positive divergence now forming. If it does not go below here, that's a positive divergence. It's not formed yet, but it is forming. So we got to be watching for this, okay? My MSI basically tells us the directionality of the market. Right now, it is down. It is down, but the market continues to make higher highs and all-time highs, okay? So it doesn't mean that this is bullish. It just means that we're beginning to see early signs of divergences. So will the summer rally begin soon, or are there bigger sell-off coming before this happens? The market is heavily, heavily, heavily rescued and manipulated at this point, folks. So nothing is as it seems. And the last time we saw something like this again was back in 2008. All right, so put to call ratio, it has risen from 0.53 last week. We are finishing the week at 0.63 at this point, okay? So this 0.63 means that we're finding support basically off of this uptrend line, right? These overshoots into 0.875 seems to be the expansion of the range of the put to call ratio. Obviously, nothing's really going to happen until we start getting above 1.0, right? On put to call ratio if you are a bear. So it's a very confusing market at this point, but we do need to pay attention to these. It is that we finished a little bit above from last week's finish from June 14th. On June 21st, we're at 0.63. It doesn't mean much of anything until it starts getting impulsive, but I do believe that we're making higher highs at this point. Now, VIX. On June 7th, I said VIX continues to point towards extreme downward move near the bottom. This is where we talked about. So on June 21st, this is where we were, right? We've kind of bottomed out, and now we're in this volatility box that we need to break out of. Here's a downtrend line that it needs to break, try to break out this Friday, and it did not. But it is overall forming a, what I would call a semi-bullish formation, and that is maybe a little cup forming or maybe a double bottom of sorts, right? Right here in this area. But it does need to break out. If you're a bear, this needs to break out higher. We did finish a little bit higher than the previous week, but it's got a lot of work to do at this point. The market is basically showing basically 4 to 7 stocks that are holding up this market, along with the banks just being supported like you wouldn't believe. They're just in your face, the central banks, in terms of protecting these banks, okay? So let's get into the fear and greed index. On June 14th, I said fear has spread as the indexes continue to make all-time highs, and that is true as of today. And when we ended, not today, but on June 21st, we went from 38, improved a little bit, but it's 41. I mean, market is at all-time highs, folks. I mean, SPY is hitting, probably people are talking about going to 560, 550, 600, 6,000 on the ES, and yet there is fear. The last time this has happened, again, I'm going to keep coming to this number and date, and if you want to see why that's significant, go look it up, and Lehman Brothers is the clue, okay? Let's look at the sector rotation in the S&P 500 breakdown, okay? So I believe something interesting is going on, and that is that on SPY, it looks like it's showing early signs of breakdown, okay? We had 2 full days of bearish candle formation. The other one that's doing that is following suit. It's technology. So there may be sector rotation coming out of these. Interestingly enough, based on my consumer demand destruction, I told you that nothing goes down in a straight line. However, so consumer discretionary, these are things like Lululemon, the advanced auto parts, AZO, Williams-Sonoma, et cetera, et cetera. This week, we broke above the downtrending line. This is the bottom. And so is XLY bottoming. And you know that Lulu is one of those stocks that I'm looking at for a rip your face off rally. if and once we get this downside resolved, all these divergences resolved, okay? And I do believe that sharp move is coming. I just don't think it's going to last long if it ever comes at this point. Getting sick and tired of it, to tell you the truth. XLC is breaking out also, and the industrials are on a downtrending line, so that's pretty bearish. XLB is on a downtrending line, no attempt at breaking out. Energy tried to break out and then failed, and that is bearish. So these are any of the names, especially in the alternative energy sources, like First Solar, took it on the chin. We've singled that out. We did great in our group. Continue to pay attention to this group. Consumer staples, one of the stalwarts of this quote unquote inflationary problems that we have. Yet, they start coming down. This was the stronger area. So anything in the boxes you want to look at as potential topping patterns that are forming. Healthcare is fairly healthy. It is trying to decide whether it wants to break out or break down at this point. Utilities technically should be the strongest during recessionary or market dislocations. It is near the market top, but we are beginning to come back down. Financials, again, even though they've been propped up, and they did prop this up, look at this candle here, right? But it's still within the inside day, and we are on a downtrend. Pay attention to these financials. And real estate it's interesting to me because real estate seems to be making this kind of like a bear flag. Is it going to resolve downward? That remains to be seen. So pay attention to these, folks. Let's go into my indicators and the charts, and we're going to start with our divergences section. And these are the divergences that I'm talking about. S&P 500 or SPX unweighted is up here, and this is the XPX normally weighted. Okay, so these are about what, 78 FANG stocks, and probably some of the financial stocks that are being propped up by the central banks is bullish. However, the equal weighted ones continue to show a divergence, right? We're coming down as this is going higher. This divergence, while it may not play out tomorrow, but it is indicating of something more sinister somewhere down the road. It could be tomorrow, it could be in a month, it could be a few months from now, a year from now after the election. Who the hell knows? But you got to pay attention to this right now because it is telling you that there may be an imminent signs of sudden weakness or some sort of a rug pull that may be coming. Now, when we look at the Dow transports, and we talked about this in a bit, the top line is basically Dow Industrial. So over the last, since end of May, Dow Industrials has been diverging a little bit higher, right? As we are, but the transports are leading the way down. That is another divergence that we need to look at, and it hasn't changed since last week. So there's two divergences that are present. More importantly, we're looking at, for me, four major stocks are holding up the markets right now. I'm not even including the financials because they are so heavily manipulated at this point. But NVIDIA, okay, is down here. This is NVIDIA right here. NVIDIA is going higher, but I want you to pay attention. NVIDIA broke down from this uptrend line last Friday. Okay, so I'm looking at, like I told you, we're looking at NVIDIA. We're also looking at SMCI. We're looking at ASML, Avagio. All of those are showing signs of weakness, and we have Micron reporting earnings next week. But more importantly, the other thing is Meta is actually showing signs of divergence near the market top. If these two start rolling over, the markets will roll over, folks. And then we've got Apple. And Apple is basically this blue line. From this uptrend, we broke down from here. That's why I have it all circled, folks. And then, of course, Tesla is still showing weakness, although it tried to recover a little bit this week. It just really has been lagging. And Tesla, to me, is the barometer for the market. If the market is going down and Tesla starts moving higher and defying the markets, it means a rally is coming. If the market is going higher but Tesla starts to lag like this, it means, in a lot of cases, sell-off is coming. So this is something that I watch very, very prudently. Okay, the other thing that I want to talk about is the 10-year treasury. Okay, so the 10-year treasury has been on a downward trajectory. And like I said, the Fed needs to keep this below 42.5 or lower to keep the banks alive, or keep the illusion that the banks are solvent, but they're not. Okay, so basically this trend line is very, very important. We're below the ADMA. ADMA is kind of my signal line. It needs to get above there for it to move higher. If this thing starts to move higher and it looks like it's looking for a bottom at this point, if it does that, the markets are going to get volatile. Okay, so that's the other one. US dollar. Okay, so I had a comment from a viewer, and it was a good, valid comment. So I want to set the record straight here. I'm not saying the US dollar is going away, that it's going to disappear or not going to play a prominent role in the um, global economy. What I am saying, though, is I was merely trying to explain the reason why a rising dollar is so negative for the U.S. stock markets, and why the rest of the world is devaluing their currency against the U.S. dollar. And that is because the world is basically looking for a new, more equitable form of trade, especially in petrodollars, petroleum trade. I'm sorry, tongue-tied. And that is that the BRICS nation, especially their action, is showing us that the rest of the world, and I think this is misunderstood, is that when I say it's a race to zero, it is a devaluation war. U.S. needs to devalue their currency against the rest of the world, but if they're devaluing, other countries are devaluing their currency against the U.S. dollar, then the end result is that the U.S. dollar will rise. It is an inflationary event. We had the power to print money without any assets backing it, partly because of the petro US dollar arrangement. So what that means is that as we start to lose prominence in the global trade, all of those dollars that was exported to the rest of the world is going to come back to the U.S. mainland, and I believe this hyperinflation initially for the next foreseeable future for the next year or two is going to continue. Unfortunately, it's here to stay. That's why a rising dollar is negative. And for me right now, I can tell you that we bottomed here into this volatility range, and we are now in an uptrend and ready to break out. I believe we're going to go to about 106 to 106.4, maybe even higher to 107. Above this 106.02 or 106 roughly, this area, it's going to be not a very good thing for the market. So keep an eye on the dollar. I think dollar is going to rise in the next week. This is a cleaner version, without all my indicators. I just want to show you that we are on an uptrend, but we are breaking down. So this needs to be paid attention to. If we break down below this trend line, I think it's going to get fairly impulsive to the downside on the SPY, okay? And you can translate the levels into ES, but SPY is just easier to deal with because they've got gaps that I can work with. Now, the other thing is that let's look at the SPY daily, and I'm going to do this really quickly. We've got a formation of negative downtrend on the divergence on the RSI. I believe we may have topped on the daily, and we are now again sitting on that orange trend line that I believe when it breaks, and if we can get below this ADMA, which is the green line right here, we're going down. We're going to go down to 535 at least, probably targeting 530 sometime next week. Okay, if we are going to continue to come down. Okay, so when we look at these, we have MACD that's diverging right here. Histogram's diverging. We have a kind of a death hook forming. CCI is definitely negatively divergent, and it is negative. It's bearish. The stochastic is bearish. And then PPO-ADX is beginning to form this negative downward-facing cup formation, which is a bearish sign, folks. And PPO-ADX crush indicators never lie. All right, and so accumulation distribution, we're near the top, and you can see kind of it flattening out. Okay, these are all signs of losing momentum to the top. As we come out down, as ATR starts to move higher, it's going to confirm the downside move with velocity. So we're losing momentum to the upside. As we gain steam to the downside, I believe there's more sell-off that is going to come based on these charts. On the weekly, I mean, it's bullish as hell, right? But the RSI is divergent. We are failing over this R2 level, 544. I mean, it blew past any conceivable levels. And I think 550 is probably the next target if it gets there, unless we start to stall right here on the weekly. Remember, weekly moves a lot slower. We're on this trend line. We need to break this yellow trend line to come back down into the 516 to 507 level. likely target is down into this 488.45 eventually, sooner than later. I believe that is what's going on at this point. Okay, we're near the top. Can it go continue to go higher? Of course. This is a market that heavily invested by the Fed, and they're going to continue to push this. We have a negative divergence on the MACD, and negative divergence continues to see. This is the loss of momentum that I'm talking about right here on the MACD histogram. Um, CCI is not going higher. In fact, it's contrarian at these levels. The higher it goes, the more likelihood of a pullback that's coming. Stochastic is chopping near the top end. It's still kind of in the bullish range, but it's going to, looks like it may want to turn over. PPO ADX on the weekly is non-conclusive. It still looks fairly bullish, but it should resolve on its own. Accumulation distribution at maximum top. And then, of course, ATR is at the lower end. Again, coinciding with that loss of momentum. And as it turns to go higher, since it's been going up, we're going to gain speed to the downside. And that's how I use my ATR, folks. All right, so let's go into Lululemon, partly because it is something that I'm looking for, that we have positions on, that we're looking for a rip your face off rally once that comes, which I believe it will. So, I'm all over the place at this point. All the divergences, all the loss of momentum that are forming, and now the techs and SPY having maybe rolled over, especially on the NVIDIA. How sustainable is that NVIDIA going to the moon right now? All right. Looks like Tesla from a few years ago. But at the same time, we have to look at Lulu. Okay, Lulu has positive divergence on the RSI. We're kind of chopping in this level, aren't we? Okay, and after the earnings, we hit like the three, kind of 32, right? To the 350 level pre-market, and I believe this is the range that we're going to. This is where it can bounce, and Lulu can bounce very, very significantly. While the daily it looks like it's just chopping sideways, the weekly is actually more bullish than you think. We basically broke out this downtrend on the RSI, and we basically formed this bottoming formation. We just need to get above this downward trend line higher. Target is 377, about this 404 to 438, and it's not going to do that overnight, but we are sufficiently positioned for this type of rally that should be coming. And you need to pay attention, because look at the MACD histogram divergence. We're ready to make a bullish hook. CCI is telling you something, that it's gaining momentum, strength as it chops, building energy to go higher. Okay, stochastic is at the bottom channel. It's just chopping, but you can see that divergence. Look at that. PPO ADX, okay? They are literally kissing each other. They're right here, okay? That is one of the most bullish signs that we can see. Once they start expanding out, we're going to have a rocket ride higher. Just got to be patient, folks, all right? And buy enough time if you're trading options. Now, let's look at our Comerica, okay? Comerica was basically rescued the crap out of it this week, okay? Especially on Friday. You can see that bottoming, and you can see that formation. It is running into this 20 SMA area. We have all this area that it can go up to, but we got to see, because there is divergences, there is problems within the banking sector right now. Okay, and this is why the TNX has been heavily coming down, because the Fed wants to protect the banks, right? That's where all these misdirection is coming from. The CCI is positively divergent, okay? And when you look at even the PPO ADX, it looks like it's beginning to form this bullish formation, okay? You want to talk about a rescue? I wrote it right here. I mean, look at this. Okay, is that even normal? What good news was there? Is there anything good? This is manipulation, folks. Okay, this is the powers that be supporting banks to keep the illusion that banks are safe. The problem with this is that ATR now is at the bottom end of the range, and once it starts pushing higher, we're going to have a steep sell-off, and I think that's coming. Remember what FDIC said. There's about 63 banks, and I believe Comerica is one of them, is going to fail. And I think that's what they're doing. They're trying to position themselves to a point where when that happens, that they're ready. Weekly, it's telling us a different thing. Negatively divergent on RSI. We broke down from this primary trend line. We're broken. We try to gain above this 50 SMA, and we basically finished right on it. Inconclusive. However, the downside risk is really down into this breakout area. This is where it broke out. This is 42 to 38 to 35 is where it's going to go. If things get really impulsive, yeah, I mean, this thing you could see in a blink of an eye get to 27.5 if they come clean, and if this is one of those banks that are going to fail. The MACD is negatively divergent. We had a death cross here. CCI is continuing to show negative divergence, and then everything is negatively divergent. Okay, we're forming this bearish cup pattern, inverted cup pattern. Okay, if this goes up here, that's bearish, folks. And look at this. I mean, even on weekly, I mean, are you telling me that in a span of about a week that this is the amount of demand that was in there? This is blatant manipulation, folks. And then this is how we know it's manipulating, because the ATR is now at the lowest end range possible. When this breaks out, the stock will sell off. Okay, take that to the bank. No pun intended. Folks, let's go into Meta real quick, okay? I do believe Meta is negatively diverging and it's topping and it's losing momentum. Okay, we topped back in, June, like probably 16th or 15th, and we've been steadily coming back down. Friday was pretty rough for Meta. Went from about 500 down into about 494. I do believe that it has a target down into this area. If that breaks, we're going to test all the way down into this pivot level of the 450.21. Okay, so pay attention to the Meta really quickly. Let's just look at MACD. Okay, that's bearish. Bearish hook has formed. CCI is negative. PPO ADX is negative. Accumulation near the top, but look at the ATR is at the bottom. If it breaks higher, this is selling off. We gotta be watching Meta. Here's Meta on the weekly. All right, weekly it's still kind of near the top, so massively divergent to the low side. We're selling off on that downtrending line, and this is a bearish formation. There's some positivity, maybe some positive divergence in the MACD, but who knows? At this point, the PPO ADX is telling us that it is negatively divergent and that it is rolling over. So this is a case where it rolled over already a few weeks ago, and we're just going to continue down. As this comes down, we should start getting sell-off. Remember, Meta has been a Teflon to the bears, okay? The other one that I like a lot is ASML. Look at the PPO ADX forming that bearish hook near the top end of the accumulation, but ATR is near the top end. It's going to start coming back down. Why am I bearish? If you look, that I believe ASML has topped. Yes, it got a little bit of a bounce after selling off. I did warn you about that gamma unwind, and so those that took advantage of it did really well, especially if you sold in the first 15 to 30 minutes of the market. That was a 7x trade, okay? So, but we are looking for this gap fill, okay? And I believe that is coming shortly, so pay attention to this. The other one that I'm pretty bearish about is Airbnb. And Airbnb may get into this 50-day moving average, but if it stalls here, that's a sign to short. Okay, all the travel stocks and everything else are basically having some negativity that's forming. Let's go into Costco. Costco is my favorite potential short for the week. I started identifying it this weekend, and look at that. Okay, that's just getting started, which is the confirmation. Any bounces, any pops that basically stalls out, okay, above 870, below 870 from this downtrending line is a short. Okay, pay attention. Look at this sell volume. MACD has crossed over. It's negative. Okay. I mean, it's just screaming sell. Okay, they're near the top. PPO ADX is to the bottom. ATR is going to only come down, increasing that sell-off. Let's look at the weekly. Weekly is beautiful. All right, weekly is RSI negative. We have a topping pattern right here with a candle, right? Tail candle, right? Hanging man, whatever you call it. All right, we just need this MACD to start crossing over. CCI is already leading the way down. We're beginning to see on the weekly also from a bullish to the negative bearish divergence. And if it starts to break down here, it's going to be negative. Okay, Restoration Hardware. What is going on with Restoration Hardware? Nothing. You got to be patient with this, right? It's going to continue to grind down lower. There's no signs that it's stopping. Everything is directional. There is a negative divergence. There is some CCI, it's at the most extreme level. I do believe that there's a little bit more left to go. I don't think the PPO ADX, while it's getting bullish, it's not nearly close enough to where they want to be. Our ATR really hasn't even broken down into that bottom level again. And so this is one of those like Lulu that once the market starts to turn, it's gonna go bullish. But right now, I believe this is what's happening on the weekly. If you look at the weekly, the target likely is 197 to about 185 to about 175. Okay, it'll probably get down into somewhere here, probably about to 192 to 189 sometime this week before it starts to bounce higher. Okay, and then coming down. Okay, so that's pretty much what I have for the week. Okay, so we've done some significant analysis. I hope you paid attention to what I'm saying. I do want to say that divergences in majority of macroeconomic indicators, sentiment indicators, and directional indicators are very hard to ignore. I've been saying that for a while. The quad witching was kind of marginal, wasn't it? Because of the fact that we had the Juneteenth holiday. I didn't even know that Juneteenth holiday was in the middle of it this year and that it was actually a banking holiday. But regardless, that gave some time to save this. But next week may be a whole different story. Okay, so we did the technical analysis of the markets. I want you to know that the important economic data to watch, I mean, there's a lot of Fed's job owning. You could pause it and read it. The things that I think is going to kind of move the market significantly is on Thursday and Friday. We have the PCE and the jobless claims and durable goods order and GDP and consumer spending on Thursday and Friday. Pay attention to those, okay? I think these will move the market significantly, all right? All right, so keys to next week in summary: MSI is diverging with major indexes and gaining strength. However, the last time that this has happened was in 2008 before Lehman failure. Okay, the MACD histogram on the MSI is kind of starting to turn bullish. It's nothing to worry about, but we need to pay attention to it, right? As it's turning bullish, it could continue to go down. Okay, fear and greed index continues to diverge against the markets. Again, haven't seen this since 2008. Key economic indicators to watch that may move the market is GDP and jobless claims. We just talked about that. Pay attention to S&P 500 sectors. SPY, XLE, XLF, XLP, XLI are breaking down. It looks like XLY, consumer discretionary, may be bottoming. Might be a little more further downside, but the path of least resistance is going to be to the upside on this one. We're watching to see if VIX has bottomed. Okay, and is it going to go move higher? But our watch list, this is something important. I think NVIDIA may have continuation this week. Micron reports earning ASML. Costco, really, I'm big on Costco. I think Costco is basically overbought and people are selling now. Okay, Restoration Hardware, a little more downside to go. Okay, don't give up on it. Airbnb, Wynn, and CZR is going to be the next sector. I think that's going to be weak. Near the bottom can continue to rally is MDB5 and Lulu. Remember, Lulu is our favorite. Of course, I have the AMC for my small accounts trading. Not doing well. We're down about 80% on that. However, it's not over yet. These things could rocket much, much higher, especially if the market starts crashing. I think these meme stocks will go higher. Banking failure watch is CMA, RFB, OKF, Deutsche Bank, JP Morgan, and KRE. They've been rescued F out, but that presents an opportunity. You just got to put more time onto it. Okay, quad witching has come and gone. It's just unspectacular because of the Juneteenth Wednesday holiday. And divergences remain, but MSCI may be flattening. We got to pay attention to that, okay? Okay, so we are collecting candidates for your rip your face off rally once this sell-off is over, if it's actually even started at this point. But all things point to that. Is Lulu, RH, GME, AMC, and are the semiconductors rolling over? Because if it is, there's significant opportunities right there. Okay, so that's kind of all we have, and thank you so much for watching. Again, follow us at Galaxydoc Market, x.com. Like us, share us, and involve a comment. And thank you so much. I appreciate the comment that you put in. It made me kind of think about what I'm saying so that it doesn't come across like I've said the dollar is completely going to be irrelevant. It's not. Okay, and thank you, and subscribe. Okay, keep it coming. I love our subscribers. If you want to learn to work with us, please email me at coachbrandon@protonmail.com. We have some social media specials. It is a watered down, but still very, very impactful market analysis that you can get. And you can get all of our social media posts earlier, plus the watch list that we are watching that I may not have shared with you on this video. Anyways, let's get some alpha. Good luck next week.